My name is Jason. I got Ryan.
Ryan here, yeah.
Yep. And we're going to cover private credit today, really how we can put that into a self-directed IRA and grow your savings.
Yeah, let's hop right into it.
Yep.
There we go.
So I'll get us started. So we'll compare two different types of accounts. So one of them is, of course, something that you might be used to, which is your standard IRA. And then really what we do over here is the self-directed IRA. So over here, self-directed IRA, it's really for people trying to invest into alternative assets. So things besides your everyday stocks. So people come here for, of course, private credit things, promissory notes, real estate, precious metals. It goes down a very long list.
Yeah.
But you can definitely cover a wide range of things. While the standard IRA, that might be at your more common house where you don't really have as much control over it. It's really just, some stock trading and hopefully watch it grow. So some people will bring all their money here to hopefully find something that they can be a little bit more involved with, more familiar with. And then some people are here to just simply diversify their assets, either which way.
Absolutely.
Mhm.
Start off this one, Jason.
Yeah, go for it.
Perfect. All right, yeah. So what is private credit? We'll start there. So private credit refers to non-bank lending where investors can provide capital in exchange for potential interest-based returns. So really, whether you're, I guess, loaning personally, businesses, etc., real estate, debt, business loans, secured notes, unsecured notes, all possible in this case. And in this case, your IRA is going to be the lender on these promissory notes. So then jumping into the third one there, your IRA is permitted to issue a loan to any borrower as long as the individual is not considered a disqualified individual. So those include yourself personally, a spouse, parents, children, grandparents, grandchildren. So figure it's lineal ascendants and descendants, up and down the family tree. So hypothetically speaking, you couldn't bring over your IRA to loan to yourself or a spouse or one of those family members that I mentioned, just as a reference point. But yeah, pretty much anyone else is totally fine. Any other business is totally fine. And I guess the beauty of it is you're basically creating your own terms for it with the borrower as well as the attorney, if you choose to use one. So yeah, can be offered by private lenders, sponsors, or other companies seeking growth. So maybe it's a partnership, maybe it's an LLC, maybe it's just an individual. But in any case, definitely possible.
Yeah, and it'll be up to you to find the place you want to work with. So if you have a local private credit deal that you want to get into, that's fine. If it's something wider, farther away, it's totally up for you to explore here. So really the big question is, why would you do private credit in an account like this? So really kind of the details behind private credit, it's typically known as passive lending. So without having to physically manage an asset, without having to put too much work into it, maybe the person that you're lending to or the company that you're lending to, they're using your funds to get into a very complex deal. They just need the funds, they need to borrow from people, and they'll pay you back a set rate of return over time. And hopefully that beats some of those Wall Street alternatives. So, it might be worth it to bring some money over, find a deal that might bring you some better returns for that time.
Yeah.
And in this type of account, it can grow tax referred, tax free. Just really depends on if you have that traditional versus Roth setup.
Exactly. So we'll go into some common private credit structures here. So first you have the standard promissory note. So basically a borrower promises to repay a fixed sum within the interest date by a specified date. So we basically help you administer that, making sure everything's good to go from the IRS rules and guidelines. I guess internally when making these investments, you're basically creating the terms with like I mentioned before, yourself, the borrower, as well as an attorney or whoever you choose to use to help you out with this. So that's kind of one fold there. Then you have the secured note, which kind of adds a layer. It's generally backed by collateral. Real estate tends to be the most popular in that regard, but could be secured by other assets as well. So if you wanted to basically hold a mortgage in your self-directed IRA and lend it out to somebody that's purchasing, their property, whether it's, friend, potential, not lineal family member, maybe just somebody, that needs funding, you can definitely help them out. And that could be backed by the real estate. So if the loan were to default, there's no problem with you, securing that property. And then in unsecured notes, tend to be a little higher risk because there's no collateral involved. So I'll say generally speaking, and this is subjective, of course, somebody you trust. Maybe it's like a brother or a sister or like a close family friend that needs the funding. But I guess, in your case, sometimes they lead to higher returns, higher interest rates, things like that. So just to point that out there. And the last one is convertible notes. So this is just pretty simple, exactly what it sounds like. A loan that may convert into an equity in a specific business. So it pretty much starts as a promissory note, and then it has some sort of term or date where it converts into equity, in said business. So generally, this is going to be with like an LLC or a partnership.
Yeah, great job there. Awesome. So really a couple things. What do you need to know before hopping into a private credit deal with us? So first off, the investment, anything you're doing here, it has to be in the name of your IRA. So anything on the actual deal when it comes to the loan itself, it has to be in the name of your IRA. So that's normally titled Madison Trust Company, FBO, for the benefit of your name, your account number with us. So of course, open up the account first before you go ahead and get into the deal, because we got to have your account information on there.
Yeah, and upon opening the account within 5 to 10 minutes, you'll have an account number. So
Exactly.
that covers that portion.
Yep, exactly. And then when you fill out the application, it goes through a very quick pending process with just review, just to make sure you're legit, of course. So you'll be able to start really moving things around pretty quickly. The borrower, I think Ryan covered it before, but I'll just go through it. So disqualified people means yourself, your spouse, your kids, parents, grandparents, or mostly the people you can't. You actually could get as close as, say, friends, brother, sister, aunt, uncle, cousin.
Yeah, totally fine.
Yeah.
For whatever reason, IRS sees lineal descendants as, I guess you could say, closely held. That makes sense. But
Yep. Any income must go back into the IRA too. So don't be in the middle and take a part for your personal bank account. This is all going to flow strictly through your IRA. So in other words, it doesn't personally benefit you and your personal life. It really just benefits your IRA. It's treated as a separate entity. So everything will flow back through Madison Trust Company. If you do need to take a personal gain of some sort, then you would just do a distribution with us. But the idea is you can just collect the money back into your IRA, reinvest it into the next deal from there.
Yep, exactly. Perfect. So just a couple things to consider when investing into promissory note / private credit in your IRA. So yeah, I will say private credit is generally illiquid. So early exits may not always be possible. So once those terms are set into place, you're pretty much bound by those terms. So just something to keep in mind kind of on the front end. Making sure you have cash flow, making sure it's makes sense for you at that point in time. And again, we're technically passive, totally passive here. So any investment advice is basically up to an attorney, CPA, financial professional, to take care of that for you. And then from there, you're basically responsible for conducting the due diligence on the borrower. Again, that goes back to us being passive. We'll make sure it's compliant by the IRS's rules, regulations, and guidelines. But basically, tax, investment, legal advice is basically up to a financial professional. And then the last one there is you're basically responsible for monitoring the payments in the loan term. So that's, again, up to you and your attorney there.
Yeah, totally. One thing I'll add, when we're covering that word illiquid, that word can be scary for some people. Like, oh my gosh, wait, I can't go get my money. There are different deals out there. You'll find a deal that works for you. Some deals are going to be years and years, but they tell you, oh yeah, you'll get your money back really by X amount of time. There are short-term deals out there as well. So it's just up to you to find what fits your needs, of course.
Yeah, it could be one that's a year, it could be one that's over 25 years.
Yeah.
It's really just, and honestly, I guess it's the beauty of the self-directed is that, you're making that designation, whatever works, for your personal situation. So
totally.
Yeah.
So really, how do you get started with us? How do you set things up? So odds are you'll probably talk to me, Ryan, or one of our teammates over here on the account executive side of things with Madison. So we would send you the application link. You would open it up. It should be pretty straightforward. I tell people it probably takes around 10, 15 minutes to get the application done for the custodial account. We'll review the deal. So you'll send us investment documentation. You can definitely view our flow chart online. It should cover everything you need depending on what the deal is, secured versus unsecured, and a couple other things. Go on madisontrust.com, type in flowcharts, should be able to find what you need over there. When it comes to funding the account, that can be done at the same time as us reviewing the deal so we can help streamline things. So if you are doing a transfer from an IRA, typically we're able to help hold those funds. If it's a rollover, often you might have to initiate it, but the money will still get to us at the end of the day. So all good there. And if you're doing a contribution, that is fine too. Often you can just write us a check or send us money, however that may be. And if it's a combination, if it's coming from multiple accounts, that's typically okay as well. We'll just make sure that all the account types match, because traditional account, Roth account are two separate. So we'll ask us and we'll make sure that everything can fit.
Yeah. And one thing I'll add there is that I'll say generally, current employer 401ks or types of retirement plans, whether it's, 403Bs, et cetera, they generally can't be rolled over until you leave the company. I guess there could be an exception. You'd have to ask, but I'll say most of the time from what I see, current employer 401ks just can't be moved.
Yeah. Not a guarantee though.
Not always a guarantee. Yeah.
I've had people get lucky every once in a while, but for the most part, it's wait till you have to leave. Wait till you're leaving the employer, switching jobs in between.
Right, and it's worth the question, of course.
Oh yeah, it's a free phone call. You just call your plan admin, and you'll find out in minutes. They're very quick and easy. But last but not least, the investing part. That's obviously the key part there. So you would fill out what's called a trade authorization form. Should be one on our site and through your client portal. And you just fill that out saying, we want to send X amount of money to ABC company, and we'll help process that within a few business days.
Yep. So we'll hop into Madison Trust's role in this process. So ultimately reviewing the documents for administrative compliance. So just making sure that everything is good to go, if you will, for lack of a better term, by the IRS's perspective, looking at the copy of the note, if it's secured by any collateral, draft of the deed, mortgage deed potentially. So just documentation supporting that is the biggest thing here. We're just making sure it's all done correctly so there's no taxable event. Processing the payments and transactions instructed by you as the IRA owner. So basically we're sending out the funds originally, to the borrower in this case, and then all the proceeds, the interest payments are being sent back to us directly. So kind of, both ways it's coming back to us. We're basically keeping it as the custodian for the time being, and then providing the ongoing tax account support as needed. So if you do need any support, any questions, things like that, we're always here. So just give us a call. And then same thing with the tax reporting. We basically assist with distributions as necessary on Form 1099-R, as well as the tax reporting annually for the IRA, which is on Form 5498.
Yep. So typically a common question I get is, do I need my CPA involved? Unless you're taking a distribution, really what Ryan just covered there is we'll handle most of that reporting for you. So We'll be in touch with the investment sponsor as well as yourself to really figure out account value, given that it's alternative assets. So we need to keep a better track of where the values are at. CPA might get involved if you're taking a distribution out, of course, with that 1099-R, but you'll be in touch with us throughout the whole way. So we're happy to help. All right, and really why to choose us? I know there's a couple places out there. With us, you have a flat rated fee structure. I know that's very important, especially if you are trying to, keep more of the money that you're making with your returns. So we're not going to be charging you more for the same amount of work just because what you're bringing over is more money. So we're flat rated, grow the account as much as you want. When it comes to us, we are known for our support team. I always say check out our reviews online versus anywhere else. We really are known as the best there. So you'll see that we have a large support team. You're able to call them, email them whenever you need. It's all included with your account. We don't have any levels of memberships or anything like that. It's really our flat rated fee structure. It includes that support team. So you are able to get into private credit investments as well as anything else that you need. You'll just let us know. And we really do help streamline that process when it comes down to the paperwork, getting your funding through, really working things at the same time. We have over 20,000 plus clients here, $5.5 billion under custody. So we are known as, nationally across all 50 states as a recognized house for this.
Right. And if you also want to do a mix of different investments, that's also possible. So that's a commonly asked question, is that sometimes people think you have to use this just for one type of investment. So if you have a private credit investment, but also wanted to invest into real estate or crypto or other private businesses, you could do that all, in this one account.
Totally.
So this is our personal information, so just feel free to reach out. If you're a new client, definitely reach out to us. That's kind of our role here, is to help you get the process started. If you're ready to client, basically reach out to our support team. They'd be the best bet answering your questions, whereas we're kind of more specialized on the onboarding side. So just wanted to put that out there.